What is up, everybody, and welcome to Financial Trivia. I forgot, I think we're on week 10 with myself and Ryan here. We'd had a week off last week. Well, I did. Ryan was out here still grinding and stuff, I believe, right, Ryan? And I was kind of just doing whatever.
Well, I mean, I wasn't sitting here waiting for you not coming. I was.
That's okay. Hey,
Yeah.
that's all good. So we're back here. If you're watching on YouTube, it is financial trivia. We do it every single week, except if something comes up, obviously. 20 questions, 20 seconds for every single question. Everything stocks, finance, economic data, uh,
Taxes.
options trading, candle patterns,
Yeah.
Ryan's good looks. I don't know what else we cover on these questions here, honestly. But so the idea behind it is very, very simple. You get the most points on this Kahoot, and you get a free month at the Kingdom, or we have other, prizes we'll be giving out as well. We're still in the works trying to figure that out here. But if you are watching on YouTube, you can get a free entry for a week on using Ryan's sign up link, and then you get a free month if you win. So, Ryan, how are you doing on this fine evening?
Doing well, doing well. Nice Saturday, pretty relaxing for me. How are you doing?
I'm good, man. I'm good. And yes, you are right, Tyler. One of the options is if you want me to do your homework for the whole semester, that's a lot of homework. More like maybe like a day. We don't
Maybe,
do it like
yeah, an
once, but
afternoon of homework.
it's a lot of homework, dude. A whole month, a whole semester. It's half a school year. Like, dude, I could really do my own like work right now. So we've got a lot of people here tonight. I love the turnout here. We're all excited for it. We've got 8 people in here for the trivia, and we're gonna get right into it, right, Ryan? Shall we?
Let's do it.
All right, we'll get into it, guys. Welcome into Financial Trivia. We've got 20 questions, 20 seconds each one, week 10 on the board, and we'll get it going here to see who does the best. Question number one: a dividend payout ratio greater than 100% implies what? If you are a dividend investor, do you know what that means? If the ratio is greater than 100%. Nice, easy question to kind of start off. I feel like, Ryan, don't you think? Hopefully.
I think so. It seems pretty, um, I think, obvious on your choices there, but we'll see. Yes.
And so the correct answer is it is an unstable dividend. The idea behind the dividend payout ratio being greater than 100% basically means they're paying out more money than they're bringing in. And that is unsustainable because you are literally giving money away more than what you bring in. Imagine you make $1,000 and you give away $1,300, right? Like, why would you do that? You really would in this case. So, a dividend ratio of over 100% means that they are paying out more money than they are bringing in, which means it is not good for a growth perspective of any kind of company. It's not good for a dividend company as well, because as you would you would hope they would take some money left over, be able to still invest in their company and regrow it and stuff like that. And that is not the case. So Ryan, I don't know if you had any kind of other things you wanted to put onto that one. Yes, ULTY Tyler is a bad example of that because they pay out like way over 100%.
Is it?
Those are very, very risky ones, which is why those stocks usually don't do too well with capital appreciation usually.
Yeah. I would say greater than or equal to 100% is probably unsustainable. Probably anything over 90% is unsustainable, really. But
Yeah, usually for a lot of people when they say is like usually I mean when I used to be a dividend investor like years ago, I used to be over 75% usually because you're getting very, very close to like basically maxing out, your cash coming in and you're paying it back out to people. The really good dividend payout ones are like 30%, 20% because whatever's left over, they can use that money to go back into their company to research and develop and then to expand and to grow and all that kind of stuff there. So, but yeah, over 100%, not good. The only exception that I think, well, not really an exception more, is REITs have to pay out, I believe, 90% for their dividends every single month because it's part of the SEC regulations, I believe. So
oh,
they get an exception.
okay, I got you.
Yeah, so like Realty Income, Main Street Capital, those ones usually pay out a lot higher dividend because they kind of have to under SEC regulations as a result of it. So they pay out a lot more which is why like you'll see Realty Income's dividends like 5%. A lot of REITs usually have a pretty high dividend, yield that also goes with it as well. So that kind of makes that
Makes sense.
kind of bounce out a little bit. But yeah, very
Yes.
interesting stuff. Okay,
Nice.
so starting off with question number one is
Tea
in the
time
books, and
AM.
again, we still have plenty more questions, guys. So if you are joining in late or you got the first one wrong, do not fear. We have 19 more questions to go. It's pronounced cider, by the way. What are you talking about, Itai? I don't
His
even want to know.
name. His name.
Oh, okay. I don't.
What are you talking about?
What are you talking about, dude? What are you talking about? Nobody cares how you pronounce your name, Ty. Okay, I don't feel like reading it. I can just remove you, and I don't have to pronounce it at all. I want you to know that.
I'm just gonna keep saying it's Etai.
Question number two: liquidity risk increases when what? The bid-ask spread widens, trading volume rises, market volatility falls, or central banks intervene. When do you have this liquidity risk increase?
Rock, we just started, by the way, so it's yeah.
I
This
click
is
the folder
question
here. I
two.
got it. I
So
got the P in. And the correct answer here is the bid ask spreads widen. And again, the reason why that kind of works is as your bid ask spreads widen, you're going to be able to fill more potential orders potentially, which again increases that liquidity that you would have as a result of it. If they're trading in very, very small, if the bid ask spread is very, very small, then you might not get filled at what you'd be looking for. But if that widens, it creates a bigger range, and the bigger range is going to fill more of those orders as a result. So that's something that's very, very important to keep in mind about. Ryan, did you have anything else you wanted to add about liquidity risk in this case?
yeah, I mean it's you have to be mindful of the size of the ticker. So like a Netflix is going to have a wider bid ask, and it still could be technically liquid. You want to shoot for about 0.1% of the ticker is relatively of the stock price is roughly a good indication of the spread width. If it's equal to 0.1% of the stock, it's a good indication. But it's important to have liquidity because you can then get a fair market value and a quick exit when you're ready to take profit. And it is not, if you have low liquidity, you have to probably get a poor fill, and it might take longer to get the fill if you were going to sit on a price, all that.
Yeah, absolutely. I did not think about that. I didn't know that was like kind of like a possibility of like a logic to it is 0.1% of the ticker size. That's very, very interesting. I know also there was at one point an article that came out a while ago where they're talking about making it where stocks might trade in like half cent increments. So instead of being like 0.01, it'd be 0.001, believe it or not, which would increase actually more liquidity, I believe, as well. I would think,
I
right?
mean,
If it's
makes
like a
sense.
smaller, yeah, it's really interesting actually. Who'd have thought? Not me.
Yeah, I didn't, I know sometimes when stocks go below a dollar, they start getting into like 5 decimal places. Um,
Yeah, all those penny stocks. I believe at one point it'd be like they used to trade like in like 10-cent increments, like when and they they've reduced it back in like I think it was like the early 2000s or maybe late 90s. They made it like be 1 penny increments instead. So it was very, very interesting that like now that's like now that think about it, oh, a half penny. It's like, oh, okay, cool. Like why would that matter? So
yeah.
I don't know, just very, very weird. But yeah, you are right with the penny stocks. They definitely do it that way.
Yeah. Oh, and by the way, the
Very-
0.1% thing is just I got it from Taste Trade. I don't think it's like a general rule of thumb. It's just a good like bar, you know,
Yeah.
to yeah, barometer.
I mean, I'm sure some people probably trade by that and probably make a lot of money that way because you don't get that. You don't want to open up a trade and already be down like $100. It's like, oh, okay,
Yes,
like
exactly.
it's like, oh, awesome, thanks.
Or it can look like you're in profit, and then you go look at the market, and it's like, oh no, the bid ask is just wide. I'm not going to be able to fill at this profit.
Yeah, you know how often that happens right now. I have some leap options on some tickers that are not as like commonly traded, so it's interesting because it'll be like the bid ask spread one day will make my option seem like it's worth a lot more. I'm like, oh my god, I'm up 3% on this. Like, oh my god, I can't believe it. And I come up tomorrow, and then I wake up the next day, and it's like, yeah, you're down 4% actually. I'm like, oh, okay, cool. Like, thanks for that. It's so annoying sometimes.
Yeah. You got to be careful. The bid ask width.
Yeah, but it's like it's interesting because like you'll see some of them, and it's not even just like it's just like it'll usually happen like end of the day, like 350, three fifty
Oh
five, like right
yeah,
before market closes. We usually see that kind of
yes,
thing because people are usually closing out trades or doing whatever. So it's very, very interesting to watch like how that works, and then opens the next day, and it's like back to where it started. So
yeah.
it's very, very interesting.
Yes, lots of orders get put in at the end there that widen that bid ask right at the
Yeah.
close. You were correct.
And you sit there and you're just like, man, I made such a bad trade. It's like, no, you really didn't. Like, you still let your trade do its thing. It's just that, like, the visual of you losing, like, $200 when it's actually not, like,
Right.
is annoying.
Yeah.
So that's all right. All right, moving on to question number 3. How does the yield on government bonds, the risk-free rate, drive the market? Ryan, this is your question, I believe.
This is first one from me. The other two are yours.
And I believe also that we talked about risk-free rate a lot here, believe it or not, I think. This is like the third question I think we've talked about this.
Yes, I had three or four, and I was spreading them out. This is the last one at this time that I have written down at the moment. But yeah,
All right, dude, take it away.
yeah. So uh, basically, as the risk-free rate goes up, people are more likely to exit the market. So if the risk-free rate begins to be pretty close to what is a risk considered a more risky rate, which would be like our yield on stocks, then people are more likely to leave the risky asset to go to the safer asset, which is risk-free. And so that is why people are more likely to leave the market and go to bonds or something else when as the risk-free rate rises.
Yeah, I mean, it kind of makes sense in terms of the way of like it's a risk-free rate. So if you have no risk, like if that rate is going to go up, people are going to get out of the riskier assets no matter what and go into those, safe haven plays of like, bonds and stuff like that. So, that kind of makes a lot of sense, honestly, in my opinion, I would think.
Yes, and government bonds specifically, not corporate bonds, as we say when I say
Correct, because
bonds.
corporate bonds, you have a risk of defaulting on and stuff like that because of like bankruptcy and stuff, right?
Yes, because yes, a corporation is not gonna not be as risk free as the government apparently.
Right. We actually do a lot of questions about bonds, believe it or not, I feel like, compared to what I maybe would have thought before.
Yes, was watching I think a video or two on bonds trying to learn about it, so then I decided to write down a bunch of questions, and then I think you've talked about them too.
Yeah, bond market is definitely an interesting thing. Definitely. But the more you understand about the bond market, the more you do understand where our economy is going, where the markets might be going, and stuff like that for sure. So do not
True,
count out the bond market ever.
true.
All right. So moving on to question number 4. Herd behavior in financial market often leads to what? Wow, Ryan, they keep throwing my questions in here more than yours.
You know,
Alrighty.
it happens.
Does it lead to market efficiency, asset bubbles, arbitrage opportunities disappearing, or perfect pricing? Herd behavior. I feel like this one might be an easy one, but maybe not. Yeah, it's an easy one.
Apparently, it
All
was an
right,
easy
yeah,
one.
yeah. And I think we all know right now, like the biggest problem that people are facing, or the biggest question we have right now, is are we experiencing herd behavior with AI? Right? There's been such a huge, push for AI across all these different companies. They mention it in their earnings reports all the time and stuff like that. And people are saying, do we have an asset bubble? And I will say this though, I think it was Jerome Powell maybe like a week, maybe or 2 weeks ago, maybe when he was talking about it in a press conference. He
Yes,
actually made a very interesting point about this, Ryan, about the bubbles.
I
And he was
yeah,
comparing this quote unquote bubble people are talking about compared to the internet.com one of '01. And his big argument actually was that the companies that are a lot of the companies that are AI invested, they have revenue, they have made money, they have money that backs up like the AI software that they're using and stuff like that.
right.
Whereas the dot com bubble, these were companies that didn't have revenue, they didn't have it. It was all more of like this idea and not actually put into play, if that makes any sense. It was really interesting, actually.
Yes, no, I saw that quote also. Someone made an image with the text on there, and it is a very good point. Where at the dot com, those companies that were hyped up did not have money, whereas these companies have money. These are not, these are well established. I think it's just a
Mm,
matter of, I saw something that said like people who use AI, they have yet to be profitable, like the companies using it. So it's more of a matter of like, yeah, those people are buying stuff from the Mag 7 and stuff, but are the
yeah.
companies buying it profitable? Like, is it actually a lot is hinging on it working out, right? Um,
Right. I mean, yeah. I mean, like an example, like SoundHound AI is one of them. That's like I think they're not profitable yet, in terms of their earnings per share and stuff like that. But they use their AI software to like help with making efficiency for fast food places, restaurants, like orderings and stuff like
gotcha.
that. So yeah, definitely one of those things where, like they're on the brink of being profitable. Like I remember, like they're like not too far away from it. The earnings per shares are still slightly negative. I know Big Bear AI is also still relatively negative in their earnings per share, so they're not profitable yet. There's a lot of hype behind that one as well compared to with Palantir and stuff like
Right.
that. Palantir just went positive earnings per share in the recent years, I believe. It was like I think maybe like last year they were profitable, or maybe it was the beginning of this year. So they're kind of starting to hopefully see more of that one, and that's like the big turning point. Like for example, SoFi, when you turn into a positive earnings per share, that's when people love it in the market. Like, oh my God, they're printing money. They're actually profitable now.
Right.
So now it's kind of like that wait and see. Like, do they make profit with this AI software and AI, plays, or are they going to be seeing a negative earnings per shares? And if so, for how long?
True. Very true.
So, very, very interesting stuff. But yeah, I mean, it's a good point though, honestly. I was like, you know what, Jerome Powell, you make a good point, because like
Yeah.
I said, it's all ideas for the dot-com bubble. And like here, you actually have proof research data that backs it up for AI software and stuff like that. Not profitable yet, but they start turning profitable. That's where you're going to see like the big push even more into AI, I feel.
Yes. Yes. It kind of reminds me too of like crypto, where we had the crypto run up in 21, 22, and then it kind of drop for a bit, and people are the same thing. How crypto's been slowed and declining lately is like, well, this is different than what happened in 22. So similar.
Mm,
Um,
right.
yeah.
Yeah,
And
Tyson, look at Duolingo. Yeah, Duolingo has been the one that's been getting hit by a lot with their AI thing. And then he goes, it's if the internet bubble is still built the whole era. Yes, but it took a very long time because there was not a lot of money being made for the internet .com bubble. Whereas now, like we can see how fast it's being implemented in. I feel like people seeing the .com bubble were like, what kind of sorcery is this? What kind of magic? Where are you right now? And this kind of thing.
yeah.
I think nowadays we're just like, oh, cool, look at this, and like it's rolled out so quick that we aren't gonna have like the stagnationary period of like, does it work? Does it not work? Everybody knows it works. They're seeing it work. They have ChatGPT, they have Grok, they have Gemini, they have Perplexity. Like they have all these different AI software and stuff like that help to produce whatever it is they need, so they get to see it in real time. So definitely
Right.
interesting thoughts though, for sure.
Yes.
So we are looking at 4 questions in. We have Ann in first place. We have Cider. So I'll say it right for a tie here. 420. Love the name. And he's got a little flame next to it.
Well, three in a
Very, very
row.
fitting, right?
But yes, fitting. You're right.
Strat Cat and Beast Meat. Love to
Yes.
see it. That's a steak fridge. Where? What are you talking about? That's a flame, dude. What are you talking
Streak.
about?
A
Oh,
flame is a
yeah.
streak.
Yeah, cool. But it's also I know that. I'm not
I
that
think
much
you
of
can
an
read.
idiot at tie. I just thought it was fitting because A, I can't read sometimes. B, I know it's a flame, but I thought it was funny because he's got 420 at the name of it, and it's a flame. So I just thought it was fitting. Was all.
It was fitting.
You guys are talking to the guy who teaches high schoolers, so like your boy's a Kahoot master. Okay, I need you to relax. All right.
Not your first rodeo.
Now, my first rodeo. Question 5. A global investor shifts capital into emerging markets after a Fed rate cut. This is an example of. Dang, dude, they're giving me all my questions.
Heavy you at the moment. I'll be right back
Which
for a second.
means which means you get to do a lot of talking the second half.
It's true.
Let's see what people know about what this might be an example of. Ooh, tough question. This is actually considered a carry trade. The carry trade is a very big, important factor that we've seen unwind or spiral pretty heavily um, as we're looking through these kind of questions here. Yes, I mean, is it baiting us? I mean, I don't really know if it's baiting as much, but the idea behind it is that when we get a Fed rate cut, so for example, we get a Fed rate cut here in the US, we've been getting rate cuts recently. We get these rate cuts here, it means we can borrow money for cheaper. What people will tend to do is if you can borrow the US dollar for cheap, you could then put it into emerging markets with a higher yield, and then you get to collect the spread of the difference. So if you can borrow the US dollar at 3% and you can put it into a bond or into, some sort of, market fund over in Japan for say 5%, for example, which you can, the difference in those two spreads, those percentages, is your guaranteed profit. 5% minus the 3%, you would get the 2% difference as pure profit locked in because of your borrowing it and stuff like that. The problem that we face, though, with the carry trade in particular, especially with Japan, because Japan, for the longest time, you were able to basically get it in at either 0% interest or into negatives. Recently, Japan is now positive at 0.25%. So the most common carry trade that is used is the Japan, I
Yeah.
believe it's the yen compared to other markets. So if that happens, where you see higher interest rates come up for Japan, it creates this possible unwinding of the carry trade because they're now pulling their money out of it. Or they have to pay back on their interest plus more. Like it becomes a huge, crazy thing to happen as a result of it. So that's what they call as a carry trade, right? So basically, you borrow money in one market at a cheaper rate, and then you usually dump it into another market with a higher rate of return. So that way, you usually collect the spread as a difference. Um, if that makes sense, Ryan. I don't know. Do you know much knowledge about the carry trade, Ryan?
I just know it happened. We had to what a crash for not a crash, but a big drop for a day or so last year because of the exactly yen carry trade. Whereas
Yep.
I don't know if they raised or lowered their interest rates or something, but basically everyone had to sell to go close those
Cover.
loans.
Yeah. Yeah, it's very, very much wow. And again, the same thing also is like, like depend yeah, so interest rates is a huge thing, raise. Yeah, it was 0% and then it was like 0.25 and like the market's like, "Whoa, Japan's interest rates have been 0% or negative for like 15 years. Why are we all of a sudden having to pay for it?"
Right.
Yeah, it was before it was free money.
So they had to
So,
unwind it.
um Yep, exactly. And it unwinds it. And that means that in order to unwind it, they take the money out of the US market to then use that money to then pay off the loans in Japan. So they take money out of the US markets, it crashes the stocks as well because the money's coming out. So it has a big outflow repercussion usually.
Makes
So
sense.
very interesting stuff.
Yeah.
Carry trade, look it up. You don't have to. You just learn about it from me. Fred Financials.
Yeah.
There you
You
go.
just told everyone.
Yep. I hope you all get to live life and not just survive life. Thanks, Rock. I appreciate that. I also hope that. Also, we do not get a bonus if we fail so many kids. Okay, we do
I
not,
think it's the opposite.
because I would fail. I would fail. I would fail all my kids then. Honestly, if I
Yeah,
got
that
a
would be
bonus
a
for it.
poor incentive program.
Right? My students will ask me all the time. They'll be like, Mister, like, what happens if like we all pass? Do you get like an extra bonus? And I was
No,
like, no. I
get
I
fired.
was like, I just get the satisfaction of you guys all learning.
Yes. Well, you isn't it the whole thing is that you can't have everyone passing? I mean, you want it to be a curve, right? I mean, isn't that technically the way it's
Yeah.
meant to be for you?
Yeah, yeah. I mean, in theory, like for me, like, depending on who's teaching who, I mean, like there's some teachers who like where every kid passes. I don't know how it's even possible, but I mean, for me, like there's always gonna be those kids that fail, and I say, hey, it's a life lesson. You learn more when you fail than when you succeed. Believe it or not, I know that's a famous quote, I believe.
That is a real thing. You are correct.
And a tie. Do not get me started on the No Child Left Behind policy. I completely know about that. They
Come
sit
on,
there, everybody sits there and questions is like, how do we fix the education in the U.S.? I'm like, gee, I have an idea, but nobody,
yeah,
but nobody listens to my ideas. So,
there you go. Well, you were also like 8, so
yeah, because what was it, 04,
I think it
oh
was, yeah.
03
So you were
when they
8
went
years
through?
old
Yeah.
or
Oh
something like
man, so
that.
I was part of the no. Oh man, so I was never left behind
No,
then.
I was 14. I might have been left behind a little bit before then. I don't know.
uh Yeah, and now you got McMahon. Yeah, even better. Oh, dude, yeah, I know it. Trust me. Like, what's crazy? And I'm not gonna get too much into this and like the political stuff. I'm not really a political person. Um, she said my mom left me in the mall. Love that. Um, The thing that like as you teach, as you are part of like education longer and longer, like the stuff that you see and you hear behind the scenes is like just crazy stuff. I don't want to get into it obviously, but like the stuff you hear and see is like just crazy.
I'm sure.
So
I'm sure.
yeah. All right, moving on to question number 6. We gotta get this going here. If the yield on 10-year treasuries drops below the 2-year yield, the bond investors are signaling what? Another
So
fridge financials question.
yes, but a bond
Dang.
question.
But a bond question, because you gotta know how the bonds work. If the 10-year goes below the 2-year, what does that signal?
Mm-hmm. Oh, David left,
You
huh?
know.
David's like, never mind.
Ah. And believe it or not, it is a tight credit conditions ahead. It's actually, I know it's an interesting question to think about here, but again, if the 10-year goes below the 2-year mark, what that usually signals for bond investors is that you have this, this impact of this tightening happening here because you are basically able to lock up your money for less time and get a higher return than locking up for longer. So, yeah, I mean, hey man, we can't make all these questions super super easy. Rock, unfortunately, we gotta have a little bit of some toughness in there, to be honest.
Yeah, you know.
But you have tight credit conditionings ahead coming through as well as a result. There's a lot of steps between the question and the answer. Yeah, it's hard. Hey, we gotta make it hard at
It's
some point because some people
true.
like to use AI in here and chat GPT their
I mean,
questions.
but apparently last time we had Blazin using AI, so I don't know. I mean, maybe we just give people 30 seconds. I don't know. We'll think about it. Or we
No,
think about
too many seconds.
or we're just conscious of it when we create the question. Maybe that's the better idea. I try to be.
Yeah, I mean, but the thing is, though, is if we made every single question so easy though, then like it'd be just like everybody would be like same score.
True. True. We wouldn't want everyone getting 18 out of 20 every week.
Yeah, only Anne can be pulling that number out.
Yes. Although, she's probably working, so she might be struggling. Or she's
Yeah, but hey.
or she's gonna question your questions. I don't know.
Yeah, I did as well. Yeah,
These
they're hard,
questions are hard.
Anna. Hey,
Hey,
we're sorry. We are
if
sorry.
if they're hard for Anne, I feel I think that's a job well done. Even though if we don't want to make it too hard,
Here's the thing, though, right? It's not like everybody gets every single question wrong.
it's true.
And that's what matters.
Yes.
If it
I
was
mean,
like
actually,
every question
we
is
don't
wrong,
really know to be
and
honest. But usually someone gets one right.
right? Yeah, that's what you usually hope for, right? It's question number 7. How would one sell a cover call in futures? Finally, a Ryan question.
Yeah, we had a few years in a row. Now,
I
I
think I'm
won't
more
give
than
a hint away
halfway.
on
I think
this
I'm
one. I
more
was
than
going to give a hint away.
halfway.
What'd you say?
I think I'm more than halfway through my questions already.
You are. I haven't been counting. What are we on? 7? Yeah, this is only my second question. So yes, you're correct.
Yeah. All right. Take it away, Ryan.
Yeah. So, understandable why a lot of people would say it's not possible. It actually is possible. And you didn't, if I didn't really think about it. But basically, you just, you buy the index, or excuse me, whatever future you want to buy. You buy a future in the, let's just use Z expiration. You can then sell a call against that future in the Z expiration. So I actually just did this yesterday. I bought an MES contract and then sold a call. Well, I sold a strangle, but I did it with MNQ. I did it with MNQ. I bought a contract and then I sold a call in MNQ. So basically, if I'm short a call, but as long as if it blows past, I just sell the future and I close the call. So it's a way to kind of reduce your cost basis while holding the contract. Now you can't do that in a prop firm, of course, but yeah, like Mr. Galaxy said, it is semi-naked. It is on margin. So technically, if it goes down, but you just got to be wanting to hold on to it and all of that.
Hmm. Very interesting. Did not know that. And we
So
all know that the Z in the future stands for December, as we know.
yes, but forward, it's not. You buy the call and then you go into options on the future. So it's a whole separate thing. You're not putting in a sell to close order. Um, but yeah, you're not going to be you can't do that in Top Step. This is something you're gonna have to do in a real brokerage. It is not on prop.
Very interesting. Hmm. Okay, love
Yes.
that.
Yes.
So right now we are looking at a pretty close race though, because we make these questions harder. So when these questions are hard, it makes the race a little bit of a closer one, honestly. So we like to do that, and we've also learned that sometimes when we put questions in, sometimes the wording is a little bit obviously a little bit off. So we're not like know all be all individuals here. We still what we think might be like, oh, it makes sense. Some people it doesn't, so it does happen from time to time here. But it's all good. All we here to do is learn, right, Ryan?
Yes. Yes. It's something that someone like Ford could learn about. I mean, even though he only uses Top Step, which is fine, but if there's avenues to kind of look at futures differently if you're ever interested.
I
Nice,
hear you.
Tyler.
Absolutely. Question number 8, moving on. A protective collar involves. I actually
Ooh,
did this recently on
protective collar.
Chipotle, believe it or not. This is another one of my
Chipotle.
questions. I did it on Chipotle. Yeah, I did it on Chipotle
Did
because Chipotle got
did one
slaughtered
of those
in
did
their
one of those
articles.
legs get tested recently, or did you just do it like yesterday?
I'll
Go ahead.
No, I did it right before earnings.
Oh God.
Yeah. So basically, I'm not. I have a leap option on Chipotle right now for
Ah,
2026 June of next year. And so I made some money selling covered calls against it, like poor man's covered calls, essentially. Then I knew earnings was coming up, and I was like, how can I hedge earnings to the downside because it's a leap option, which has a little more value to it. And so I sold the call. So I had a short call leg up by like $45 or $44. And then I used the premiums from the short call to then help offset my cost on the long put I bought. And it smashed right through the put. I made like 500, I made like 400, no, it was like $400 on like $40 as a hedge.
so you didn't allow it to assign or exercise it. You closed it. See ya,
Well, so
Ann.
because so
Go ahead.
See, and yeah. So what happened was, so yeah. So when it smashed, I just closed out the. It was a two option on Robinhood. I just closed both about the same time. So I
Gotcha.
closed the long put for a lot of profit, and the short call also had profit
Right.
because it went
Makes
against
sense.
the call side, obviously.
Yes. Yes.
So I made a lot of money from it.
Well, that's a good way to reduce your. I didn't think about. I thought you had it there to exercise or it, but it makes more sense that you would just take it
Oh.
to lower your. If it's a poor man's covered call, you're just lowering your cost basis more and more. So
Yeah, and then so basically, so what I did was, so the profits I made from that, I then averaged down on my Chipotle leap option. So I bought another
oh no,
contract for like $300.
oh
So
no, well
so I averaged down a lot.
300. But I don't know. I don't know about Chipotle,
Yeah,
man.
but,
It's been a little rough lately. Go ahead.
yeah, no. Oh, definitely for sure. But now I'm able to sell some cover calls still against both of them now, which is great, and still get some premium still. But I've already like offset like my cost basis was like 1,300 between two contracts, and now it's
Okay.
like I've saved myself like $500. So now I have two leap options for June of next year, and my cost basis is $800. Is like my like risk on right now is $800.
Nice.
So so then what I could do now is I could sell two covered calls against my Chipotle options, and then use that to offset my cost basis even more until next earnings comes around. And then I still have, I think, at least I can still go through, I think, two more earnings calls, maybe three, depending on when they announce it, between
Yeah.
now and
Well,
June of next year.
yeah. I mean, as long as
So at least two.
you're patient and watch Chipotle go to zero, you'll be good to go, man.
Yeah, I mean, hey, Chipotle goes to zero, dude. I mean, like again, I'm only down $800 then.
No.
So I went from 1,300 down to $800. If it
Yeah.
goes to
Yeah.
zero, but
They're not going
yeah,
to go to zero.
no, I think they definitely I think the biggest problem they had was that they faced was like the biggest hitter for them because they beat on earnings per share. Believe it or not, they beat on that. The biggest problem they faced was that the lower middle class, like they saw a lot of people that are from the lower middle class bracket, like not going to shop
Right.
there, and that's a huge problem. That's
Yes.
fast food. That's a huge problem. So, hopefully they fix it for the turnaround, but who knows?
I think a lot of the food stocks that had companies had issues similar with that.
Yeah, Sweet Green got slaughtered.
Ava.
And then Wendy's is closing 300 restaurants, I believe, as well.
Yes.
Um,
Kava
but
did poorly also, I
Kava,
think,
yep.
just by osmosis.
Oh, okay. Yeah. So, but the collar is really nice though. The collar really, again, like I paid $50 to hedge. If it went, and the math I broke down for it for the collar was that if it went up to my cover call strike price, I would have made a lot of money on the leap option enough. So I would have at least made some profit still, and I could have closed everything out and just made like walked out like $100 or $200 out of like 1,000. So it'd be like a 20% return. But it would have been nice because again, the downside, I just made a lot of money on the downside still. So still offset my cost basis a little bit, So it's not too bad.
Yes, yes. But see it forward.
All right, question number 9. Loss aversion explains why investors. Wow, dude, they keep giving me all my questions.
You're gonna be done in a couple minutes here.
Oh, thank God, dude. I'll let you talk all the way. uh, Rock said, "Give me your points." Yeah, I wish. Could you imagine if you could donate points? That'd be kind of cool,
Yeah,
right?
you sell them. Highest
Yeah,
bidder.
sell them.
Yeah.
Yeah, I mean, and a lot of people already know this kind of this one, which is great. Holding too long, losing positions too long. Like like I can't be wrong. I don't want to lose money in my trades. So they just keep holding them for way too long. They keep losing money because they don't want to accept that they lost money. So they keep letting it go. Um, Basically, is the market psychology of things. So that was one question I put in. That was like a market psychology one, where you see these losing, trades, and you're like, I'm going to hold it, even if it goes against my strategy. I'm going to hold it anyways. I don't want to take that loss on it. So, people got to learn to cut their trades when they don't feel confident in them enough, I believe. Is what my logic would
Yes.
be, right?
Yeah, it's definitely confidence, right? I think if you, and then also dollar amounts in it too. Like if you're getting too nervous about it, you're probably too large, like we've talked about. You've said, but
Mm,
I think it's a matter of confidence because yeah, you can hold a losing position and eventually, let's say it's a stock, not an option contract, will eventually, most likely come back. Depends on the company,
right.
but yeah,
Yeah. I think when you first start trading, you first start getting the market, usually you really feel it. Usually you have that like, immediate like I need to close, I need to close. I don't like seeing this loss or whatever it is. So as you're in the market much longer, usually you get more of that like tolerance to like handle your trades more, I feel.
yes,
So love that. All right, question number 10.
what
Hopefully
should
a Ryan question.
yes.
Yes, it is a Ryan question. Ryan, go ahead. You can read this
What
one off.
what option strategy is shown in this profit graph? Buy to open a call in the 1219 expiration and sell to open a call in the 1121 expiration. So what is this strategy or spread
He made
called?
he made sure to put in what the actual legs were in the text, so that way if you can't see the image as much, then you still got the text at
Yes.
least.
I tried to give a little bit more details in there. So, from what I put in there in the text, and maybe I need to say at different prices, but I could see how some people pick call calendar, or even just long call, but it's not just a long call because there are two legs. But anyways, a call diagonal is when one buys at the money 40 delta call in a further out expiration, and then sells a further out of the money call, usually shoot for like a 20 delta against that long call. And it's just a shorter term. I mean, technically a poor man's covered call could be considered a call diagonal even too, but usually pick them like 630 to 60 on the long leg and, you know, less than 30 on the shorter leg. But yeah, that's pretty much that's a call diagonal. Put diagonal
Love
would be
that.
the same thing, but with puts. And then yes, a
Makes
call
sense to me.
calendar, sorry to rock, is basically if we show the media, if you could for me, fridge there. If these were both 230 or 250 calls, different expirations, that's a calendar, rock.
Love that.
It's if it's this helps me remember because it's the lower end. I got you. I don't know what he said there, but what so yeah, rock. If these were both on the 250 or 230 strike for both of these same expiration, that'd be a call
There you go.
count. Yes. Um, Is it very hard to see the image, everyone, like, on when you're playing this?
Good question. Good question.
A bit. Okay. Easier on phone. Interesting.
Thanks, Atai, for the a bit part.
Yes,
It's a yes
because
or no. It's a yes or no question. Yes or no question. But it's okay.
it's kinda hard to
Thanks.
see, I think is what he means to say.
No, I know.
It was small on my laptop. Okay. Not great.
Yeah, I don't know how we
Alright.
can make that better. I blame Kahoot.
I mean, maybe type more in the question and then have a picture there just and hopefully you don't need it, but at the same time, it's nice to see the profit graph. So,
Yeah, I know. I hear you. All right, moving on. Question number 11. Sold to open options are always taxed as short term games, even if held for over a year. Ooh, true or false? Good question, Ryan.
like,
I forget we can do true false questions, honestly.
yeah, well, sometimes I think of some I'm like, well, it's only true or false. I don't have options. Um, yeah, so these any options contract that you sell to open, buy to open, and then whenever you close it, as long as you've held it for like let's say you bought it on January 1st, 2025, as long as you held it till through January 1st, so January 2nd, 2026, that is then a long-term game. Doesn't matter if it's stock or options. That is always how it works and with equities.
You know what you got to do for 4 questions? If you want to do say, you can do true, false, not true or false, kind of true or false,
There you go. Uh,
and just and just make it confusing.
yes. Make it very confusing. Tyler, are you joking or not? Because it is always it would be long term if held over a year, unless you were just being funny, of course.
Kind of true and false. Yeah, that's
Yeah,
what I love to hear.
over 9 months. What math are you guys doing?
I didn't teach them this. I want you to know that. I mean, I'm a
What
math teacher, but I
what
didn't teach
math?
them this. Not my math. Say
Over
that much.
so now I gotta go look again. I think that's what it said other than on an assigned put. No, so any double check me. I could be wrong, but any options contract held similar to stock held for a day past when you bought it, over a year and a day past, then it is long term. So if you buy a leaps, it's not 9 months and a 1 day. No, God, I really where are you guys getting this information from? Short term's 12 months or less. That one's 100% forward. I don't know where you got 9 months, but maybe I don't know what I'm talking about. Maybe I don't know. I mean, that's possible, but I'm pretty. I mean, I don't. I did take tax classes here, guys. But I could be wrong. I could be wrong.
Short term is definitely less than a year. It's less than 12 months because that's income tax
Yeah.
then. So,
What?
I mean,
That's
I don't know.
this is
So,
Investopedia, but
depends
that's
on the
crazy. That
close
doesn't make
more.
sense to me. I did not know. Depending on the type of option. Hold it.
Is it because you're getting paid up front? So that's why you always get I think they treat it like dividends because it's like you're getting paid up front, right? Okay, that makes sense actually. Like
No,
dividends. Dividends are
you're
taxed at short term no matter what.
no when you sell to open, it doesn't you um okay. Just a second. It doesn't matter. I mean, maybe yeah, they consider it income, not an investment. You're talking about sold options?
I'm guessing my only thinking would be because of that. If you get paid up front, like if I sell a call on Monday morning, I get that money into my account. I know it's not like realized because I can still close it for a loss later
Okay,
on. That's the way I look
gotcha.
at it. I don't
Well,
know if that makes sense. That's how I'm looking at it.
but that was such a good question. I didn't look up what the real answer was. I just assumed what the real answer is. But yeah, I that makes sense. That so I got this. This is wrong. I don't know how we can fix everyone's score. Um, yeah. So I guess if you buy to open, it goes to like a stock. It was what that article was saying, which is
Yes,
Investopedia.
because if you buy it, you're paying for it. You're not realizing any kind of gains or not getting any kind of payment into your account until you close it out. But when you're selling it, then it's different.
Yes, my bad. I don't sell to be fair, I don't sell anything over a couple months, so, I've never done it before. I've never sold a leaps. Like, I know there's some people who do that for income, but I just
Do you know
I
I
don't.
saw yeah, I saw somebody sell a Nvidia call option in my video today from Wall Street Bets. It was like a 6 month out expiration. Now it was like a 130 in a call. It was like a 130 strike. And I was like, dude,
Yeah,
like what are you doing?
yeah,
Like
right. Yeah.
like Nvidia, like it could be on like if it was like a dividend one, sure, because they don't move much. But Nvidia, come on, man.
Yeah,
Uh,
that was dumb of them.
and he was like, I hate wheel strategy. And I was like, for what? I was like, you're not doing it right.
Yeah,
Of course you hate it.
I
Do
bet
it
you that
right.
guy was rolling or something, but maybe not that person.
That's why I said like that's why like I know we've talked about this before. Like doing like 30 to 60 days is where you can allow yourself to manage it. You can roll it, or you can like ride the wave up as it's going up. Because like if you're riding the 130 and then it goes to like 125 and it expires, then you can ride the 140 and you can like
Right.
stack your way up. You know what I mean? So
Yes, and Rock, apparently, I there was one thing I didn't know, but we can do a tax stream if you want to. I can help. I mean, there's not much you need to do. You're gonna get a form from your broker, and you go enter it into TurboTax or give it to your tax preparer. It's not that hard.
do you know what's crazy, Ryan? Remember how we talked about this a while ago about Nova Nordisk's my cover call on it?
Yes, I remember. Yes,
Do you know I'm actually up on that right now? Because it's like
would make sense
$45
because
and the
you
strike is
were
55.
yeah you were threatened at 70, right?
Uh, I was assigned at 68, and then I made some money selling cover calls on it. Then it went down. I sold at 55 when it was at like
There
50.
we
Then
go.
the news came out, and then it was like 60, and I was like, ah, whatever. I'll just let it go away, whatever. And I was at 45. I'm like, dude, this thing's back in the money. Like, what in the
Yeah,
crap is going on with Nova
you're,
Nordisk? It's getting slaughtered.
you're good to go. Yeah, it's yes, been a little rough. Um,
Yeah, so I'm kind of just letting it chill out for a little while. No big deal.
yeah, you got
Where are we at? Where are we at in
you
the
might want to
standings
close
here?
it soon, but Rock, yeah, it's pretty easy. We could talk about tax planning. Like there are things you can do at the end of the year if you want to offset. If you have a lot of taxes coming in, you could sell some stuff. That's what people are doing. That's why you see drops in the
Oh,
market
yeah.
towards the end of the year sometimes. Anyways, go ahead.
Question number 12. Which option strategy is a short put with defined risk? And while we answer that question, Ryan, you can go back to what you were saying.
Um, yeah, there's just ways you can you have to take realized gains, but some or losses, but sometimes there's stuff that you might not really want to own anymore or something, and you can just harvest those losses, and then if you wait 30 days to buy it again, you're good to go.
Take it away.
Anyways, which option strategy is short put with defined risk? That is a put credit spread because a put credit spread is you're selling, let's just say the stock's at $10, you're selling an $8 put and buying a $7 put. So you're you're short a put, but you're defining your risk by buying a leg lower, further out of the money than the short. So you collect a credit up front, and then your max loss is identified based on the width of the spread minus your credit received. Um, Iron Condor is a put credit spread and a call credit spread, so it's two. Iron Butterfly is also a put credit spread and call credit spread. That's just that they're both the same strike, the shorts. And a call credit spread is a short call with defined risk.
Love that. Always trading these options.
Mm-hmm. These strategies.
These strategies, guys. These strategies. Moving on to question 13. Which of these is not an omnidirectional strategy? Define
Omnidirectional.
that, Ryan.
Yeah, omnidirectional means more than, in several directions. Basically, in every direction possible, it can make money, I guess, is what this kind of means.
Yeah,
Yes.
just want to make sure in case people didn't know.
No, it was smart to have me define it. So, yes, which of them is not? It is a short put. So, call ratio, put ratio, call broken wing. We'll focus on the call ratio and put ratio. Call ratio and put ratio has a built-in debit spread. So you're buying a stocks at 100, you're buying a $90 put, you're selling two $80 puts. Or you can stagger those shorts, but let's just use that as an example. You have an extra built-in gain of whatever I just said that with was it 500 or 1,000? You have an extra built-in gain if it begins to go down towards your shorts. Um, so that's a way to make money if the stock goes down, if it's a put ratio, or up if a call ratio is. And so, but you receive a credit up front. So even if the stock, let's say it's a call ratio spread. So if the stock goes up not too high, you can make more money from the debit spread. If the stock stays where it's at or goes down, you make money because you received a credit up front. And then a call broken wing butterfly is the same thing as a ratio spread, just with defined risk. So you buy a further out of the money call. So those all make money because there's the built-in debit spread. So even if it starts to test your short, you're have a chance of still making money. Obviously, if it goes too high, then you begin to lose money.
Love that.
Hmm.
And love these
Long-winded,
images in the chat.
long-winded.
Right.
Yes.
Okay, what we're
Sorry.
looking at right now, we're looking at Cider in first place, Naomi's in second place, Beast Meat climbing up into third, Strat Cat fourth, and my dad in fifth. Or your dad.
Damn.
I don't know, someone's
Did you
dad.
give your dad your aunt the answers before?
If I did, he wasn't listening that well because he's
Well,
in
he
fifth
doesn't want to get
place.
every answer right, man.
Yeah, you're right. It could be a comeback. Watch, Dad makes a comeback for the top spot. Don't you worry.
Yeah.
Question 14: how does one roughly calculate the implied move of a given expiration?
And of course, this is if your broker
Another
doesn't
Ryan
do it
question.
for you. What did you say?
Listen, just another question from Ryan because
It,
now it's all Ryan's questions. That's what I'm talking about.
I there might be one more of yours in there, but yeah, it's gonna be a lot of me now.
There's one more. Of mine. I know there's one more of mine. Yeah, there's one more
Okay.
still.
So
Ooh.
wow, okay. Yes. So I don't yeah, so the implied move of a given expiration. So basically you just go into that expiration and you sell the at the money call and put. And when you sell the at the money call and put, that credit received will be, let's just say it's $100 stock. If it's a $15 credit, that means the stock is expected to be within one standard deviation of 85 and 115 and during that expiration cycle. And as you go down expirations, that width's going to increase likely. But it is the debit of a long strangle. It's not that because it's a strangle, not a straddle. If I said debit of a long straddle, then that would technically be a right answer too. So strangle is when you're trying to go out here. Straddles when you have two at the same. Um, it's not at the premium at the money long call at the stock price. I made that one up to throw it in there because I had think of one. And then the credit of a short strangle, it's not that because similar answer to the long strangle. Anyways, yeah, credit the short straddle. So if, that calculator from Warren Buffett, I mean that's roughly what he's doing. I'm sure it's maybe a little more math in there, but if your broker doesn't do it, that is an easy way to figure it out.
Yeah, you could also probably like do that, like especially for like earnings. Definitely, you could do that with earnings and do like a plus or minus like margin of error, like 5% or whatever, if you want to really cover extra just in case, kind of thing, maybe.
That's true. Yeah, with my earnings trades, I usually center it around the implied move of the earnings expiration.
And then what do you do? Do you sell? You sell right outside of that strike, like what it would be about,
Well,
like
I'll
sell
do
options or what?
let's just yeah, or I'll do like if I make a directional bet and it's a debit trade, let's say the expected move is to 250, I'll center my earn like profit around the 250.
Like your max profit if you do a debit spread, like your max would be at 250.
Yeah, like I would do maybe like an expected move butterfly where I'm buying something at the money, selling two at the expected move, and then buying another one further out the money. So then that way that's my profit range.
Yeah, I got you. Yeah,
Yes.
I think I've done this before. That's why I said like, oh, I've never heard of the people doing the credit side. Usually I do the debit side of it for the straddles.
Yeah, same thing. I mean, I just said credit
Gotcha.
because, selling.
Yep, got you. Hey, Naomi, maybe the only one that got it right. I think.
Nice.
Love that.
Nice.
Question question
She
15. A
knows.
country's current account deficit means. This is actually I have this one and another one then. Account deficit means what? The US is very well known for having account deficits.
That's true.
Yep, and it's just like what you're looking at here. Imports exceed the exports because the imports means they're paying money from to come into the country. Exports, they're getting paid for stuff to go to other countries. And if you have a lot more things coming in than going out, that means you are in a deficit, which we've been in a deficit for such a long time, and it's only gotten worse. I don't really have much more to add to that, honestly, because it's just, you have more things that are coming in that you're paying for instead of, sending things out and getting paid for them. So you create a deficit. America becomes a surplus. It's the end. Yeah, that'd be wild. I don't know that that's the those tariffs, man. Those tariffs might make us have a surplus. Said no one ever.
But well, someone did.
Someone
Um,
did. Someone thought that's what would happen, but it didn't.
yeah. Is is there a way? Sorry, as unrelated sort. Is there a way to discount a question though from being included in the total or no?
I don't think so. Let me look.
Just because I got that one wrong.
Everyone. Um,
No,
I I can just end it now if you want.
there we go. We'll just
It's
restart
just
it, guys.
gone.
We'll run it back. We'll run it back.
Yeah, we're gonna run it back. Yeah, we're gonna run it back. Yeah, haha, you guys. Just kidding. Psych. It's
Oh well.
fine.
Well, sorry. I threw in one
It's
wrong one. Two
fine.
people got it right. Five people got it wrong. But I would have got it wrong if it was my question, and it was my question. So
Fridge don't end it. Okay, man, I want to end it. All right, question 16. You sell a put. You sell a $100 put and receive a $10 premium to do so. When assigned, what is the tax basis of your shares? Ooh.
$100 strike put, $10 in premium. If you're assigned, if you're assigned, what is the tax basis of your shares when you are to sell them later on or not? Yes. So,
All right.
yeah. So when you sell a put, um, in terms of taxes, if you're assigned that premium, you're not paying a tax on that premium when it's closed or assigned. You're you're paying taxes on that premium by your effectively your cost basis in the shares being reduced. And this is the only time that your tax basis is like directly reducing premium and when selling premium. But yeah, so it's not 100 plus the premium or just 100 or 120. And this is only specific to short puts, basically.
Can you imagine if someone's like, "Yeah, I'm gonna actually pay taxes on share price being more than that at 120."
Yes.
It's
Luckily,
like, "Yep, nope."
the one wrong was 100. I could see how you would think maybe it's a trick question.
Yeah. I'd be like, "Oh, okay, sure, love that." I know we're waiting for a minute for Rock to come back from the bathroom here. So look at Cider in first place, Naomi in second, Beast Meat third. My dad has moved up to fourth. See, I told you, my dad's coming back up. Though I'm telling you,
He's making a
he's
comeback.
locked in. He's locked in, and then Strat Cat in fifth place. Love to see that one. Rock, I need you to hurry up. I'm getting anxious
So,
over here.
you know, to go back to the true false question that was wrong, and I think Tyler was saying is like that's the only time that you have the potential to have your short premium taxed at long-term gains, I guess, is if you get assigned that stock, hold it for over a year and sell it. Otherwise, the short premium you sell and close, you have to get short-term taxed on.
Love that. Question 17. What is the name of this candlestick pattern? We have one of these every single week. So what's the name? I actually know this
Or
one,
on
I
a
think.
covered call.
I didn't even look at the answer key. I think I know the answer to this though.
Yes, I hope people know the answer to this one. I don't know. Yeah, Tyler, I think that the premium's still short term and a covered call, you just pay it on the gain of the shares. Anyways, and it looks like you looked that up to double check that everyone got this right. You know how I find it. So, um, if this is a bearish engulfing, I believe you all, you know.
I mean, basically, the idea behind
Joking.
it is that if
I
you
get
think
it.
this is the way that I kind of visualize how this really candlestick pattern works, is that you have this like imagine these are like daily candles, and it's like, oh, look at like the daily push for the green that you might have on that green candle. That red one just absorbs like all of it. It's such
Right.
a huge candle;
Engulfs
it's
it.
absorbing the entire green candle,
Right.
literally from open to close. So that's kind of why I look at it as like it's like just covering and saying like, hey, all these people that are buying up here, now we own this as like a as a bearish case.
Yes. No, I hear you there. I get it.
Hey
That's
man,
a
it's
good
good old
explanation.
devil. Okay. Yeah, yeah. That's the way I just look at it as like it just absorbs the whole thing. That's what I love.
It's
Question
almost
number
like it's in the name.
18. Yeah, right. Which is a realized taxable gain slash loss? Dang, Ryan, all these taxing questions, man.
You know, I go to wells of information. It's we're on week 10 here. This is 100 questions basically. I think I've actually did 98 because I think the first time you did more than me. But you know, you got to find little subject matters and create a bunch of questions on them.
Right. All right, take it away.
Yes. So yeah, the only one that's realized on here is buying to close a covered call. So if you just bought shares of Netflix, you're not taxed on anything yet. If you just sell to open a short put, yes, you receive premium up front, but you haven't closed it yet. So it's still open. There's no tax realized. And then buying to open a leaps, similar to selling to open a short put or buying shares, you're not taxed until you close it. So that's what the trick was on all of these. Is basically they all said buy to open or sell to open, except for buying shares, of course. Go ahead.
Yep. No, absolutely, man. Yeah, it's just when you start to close, when you close those positions, is when you start to get those taxes.
It's when they are
Either gains or
realized.
losses, usually.
Yes, or
Yep.
sell the shares, of course.
Or sell the shares, of course. Yep. Ooh, Itai got that one wrong because he panicked. Love that. We got what? Two questions left.
Two
Question
left.
19. After a stock split, what should happen to its market capitalization? Actually, I think the last two are my questions, Ryan, believe it or not.
Really? No, I think I got one
I think
more.
it's just one of them. Yeah, I think. Really? Oh, maybe I got rid
I
of
don't
one.
know. I have not been
I
counting.
don't know. Stays the same. Wow, yeah, that was kind of a gimme question. It does stay the same, right? So when a stock split happens, it doesn't change the market cap of the company. Basically, what it does, it just gives more shares accessible to investors that want to buy into it. For example, Netflix, when Netflix does their, I think it's 10-1 split, I believe, coming out at some point, you won't see the market cap, 10x. It's gonna be the same amount, but basically, it just makes shares a little bit cheaper for people to
Hmm.
buy into. But at the people that already own shares, they just get more shares as well. That's all it really is. So,
Uh, Rock, to answer your question, and good question by the way, French. But yeah, Rock, if you wanna, if someone wins and they want to do that, that person and I will talk about money risks. But yeah, I'm willing to do it. Just depends on if it's
absolutely.
like
And the
a.
last and
Go ahead. Oh, you're right.
I'll say this. Oh, sorry. I'll say, yeah, it's my last question. I told you it was mine. A box spread locks in what? And then
Sorry.
go back to explain what you were saying. Sorry, I hit this by accident. So,
But yeah, no, I just have to talk dollar amount. I don't know. I don't know if it depends on how, if it's like a scalp, like a quick scalp. It depends on how we want to set that up or something. But I'm sure there's a time I could do it real quick. Anyways, we'll talk about it later.
yeah. And honestly, I'm actually really impressed that people actually knew what a box spread. You know what it is though? It's probably gonna be a tie being like, well, you're a teacher question, so like the
The
other ones are
longest
short
one.
answers, the other one's like super super long, right? But believe it or not, this is actually a trade that you could do. Um, oh, you didn't know? Okay, good.
Rock
So
didn't
box
though.
spread basically it's an arbitrage, which basically means that no matter what, you do make a lot of money. Beat me to a fridge. Yeah, so arbitrage is actually a very common thing used in sports betting where you basically arbitrage on different sports betting apps. So if like the odds are different across platforms, you can put money onto both and make it where you're guaranteed to make money, whether it's the over versus the under. In this trade for a stock, the box spread, if you look into how to open one, you can set it up where you are guaranteed to make profit. The only thing is that the profit is very minuscule. I think I tried to look at one once and it was like $3. And I was like, oh wow, like okay. And also it might not be possible to be filled on your brokerage account depending on the liquidity and stuff like that. So that's something to kind of keep in mind about. But it is a trade strategy where you are guaranteed to make money, believe it or not. So
I've heard about this in
interesting
sports
stuff.
betting,
So
but yeah,
yeah. But the thing is, sports betting is that they catch on to it and they limit your account pretty quick if they catch on to you doing it.
I was gonna say, I figure they're probably not wanting that to happen.
Yeah, well, so like people will say like if you bet like a very specific dollar amount, usually like, if I bet like $35.14 on like the over,
Right.
like that's very specific. Like
Gotcha.
why would you bet a very specific number on it?
Yes.
So yeah, very, very interesting stuff there. So financial trivia week 10 in the books on the podium in third place. We have Naomi. Congratulations for being in third place. Second place, Beast Me climbing up
Nice.
the chains. And in first place, with almost 11,000 points, we have Cider, aka Etai. So
Winning again.
thank
Third
you guys
win.
all for playing. Third win, yeah. Beastby's climbing up the ranks. Love to see that. Hopefully, Beastby's on the podium at one point soon. We had a lot of people playing here, which is great. We had what 10 users at some point, which is absolutely wild. Um, so that is it for the
Right.
YouTube
Fourth.
section of things. Does any I don't know if you have anything else you want to say, Ryan, to the people on YouTube here, but it's another fun week at the books.
Yeah, no, it was a good time. Yeah. We'll talk with Itai.
Yeah, absolutely. So again, if you are watching this on YouTube, check out Ryan on his WAP. He has it linked probably on his channels and stuff like that. Take a look at it there. You get a free week in the Discord, and then you can use that free week to then enter into the trivia. Win the trivia, you get a free month. It's
Yes.
just the unbelievable stuff that makes your life a lot easier. And again, free knowledge for everybody here. So if you're watching, hopefully you learned a lot of things here in today's video. And we'll be back here with another week.
Yes. Sounds good.